Hi everyone, can you guys hear me? Awesome.
Yes.
Thank you so much, Kartik, for all the warm introduction and engaging everyone. Great morning, all of you. I'm Akshay here, working with the global HR community into the sales and marketing. I'm also part of Singularity University as well, right, where we organize the India's one of the biggest leadership summits and everything, right? And now I believe Tanya also is with us. I'll be can you hear me, Tanya? Welcome, welcome. Yeah,
Yes.
good morning, everyone. Welcome to the day two of the GHRC Financial Wellness Series in collaboration with Novice Artha. We are thrilled to continue the journey with you. Today's focus is all about investment planning and portfolio management, a crucial step in turning your financial goals into like reality. You learn how to build personalized investment plan, allocate assets based on your risk appetite, choose the right funds, stocks, and monitor your portfolio in a healthy and most effective way. Before we get started, make sure that like you download the Nobias app. The personal financial coach is now in your pocket. And one of the most important things, and there is also like the coupon code as well, which you can just check it in the chat, right? You can get started with just 51 rupees and for the 3 months, I believe, and start setting your financial goals. Take a few minutes after the session to define clearly what and how exactly you want to go about and start tracking your journey because whatever you track will give you like more clarity. Now it's my pleasure to reintroduce our expert speaker, Dr. Tanya, founder and CEO of Nobias LLC and Nobias Analyst India Private Limited, a SEBI registered investment advisor and former director of Citigroup. Tanya brings a wealth of global financial experience and a deep commitment to making financial well-being accessible to everyone. Let's dive into today's session. Take the next step owing your financial future. Over to you, Tanya.
Yeah, hi, everybody. Quick question. How many of you guys were in session one? Just to get a sense of, do we know approximately? Can we do a hands up? Any way of knowing?
80%, I think
Was
80% transition.
Okay, great. Wonderful, wonderful. Okay, great. So then I mean I don't need to repeat that as Akshay mentioned, we're a SEBI registered RIA, and what we as a SEBI registered RIA, we're a fiduciary, so it is our duty, it's a mandate actually to put our client first. I also just a quick statistic. In the US, there are 300 million people, and with a population of 300 million, there are 270,000 RIAs. In India, with a population that's four times that, with 1.4 billion people, there are less than 1,000. There's only there's 900 registered investment advisors. So, in other words, every single financial provider that you meet is pushing product, right? They're either bankers selling banking products, or they and cross-selling as well. They sell, get you into mutual funds and other things, but all with commission. So it is really, really important that to understand that they all have biases, and that's why we're called no bias. So it's really important to know that they are selling a product, right? So you need to make sure that you understand the products that they're selling, you understand how to use them, and you understand that they may not always be in your best interest. Okay, so I'm not going to go over this. Just a quick reminder, what is financial well-being? You work hard for your money right now, and you're going to go from working hard for your money to your money working hard for you. Okay, and so the steps that we were in order to be financially literate, you need to understand budgeting, saving, investing, and managing debt. In the last session, we went over budgeting, saving, and managing debt. Um, so today we're going to go into more detail about the various investment asset classes, um, and we also explained that in order to actually achieve your goals, you need to have a plan in place. And to protect your plan, you need insurances. So we went over insurances, we went over your debt. We also explained last um, week how to set smart goals. So, okay, let's just jump in to going into over the various assets, and then we're going to go into the allocation. Okay, how you're going to allocate to invest according to these assets. Okay. Um, so we understood in the last session about inflation, compounding, budgeting, debt, and today we're going to go over asset, um, risk and return, diversification, and smart goals. No, we did smart goals last time, and we're going to understand how to set up investment plan. So what do we just leaving as we explained last time? You need to invest in a way that you are able to beat inflation consistently and over long periods of time, right? 10, 15, 20 years. So just leaving your money in a bank account is not going to be enough because the returns from cash and FDs, fixed deposits, and liquid funds are not going to, the returns are not going to be sufficient to beat inflation. And hence, you need to think beyond investing in fixed deposits and your savings bank account and invest in assets like um, equity, gold, and debt instruments. Okay, that are more risky, but they give you higher returns beating inflation. So why do we invest in gold? Investing in gold in India is a trusted way to preserve wealth, especially as a currency hedge. And during geopolitical issues like wars and earthquakes, they typically result in a rise in gold prices, and also holds a cultural value and offers liquidity. So it makes it a really, really popular long-term asset across generations. So it's very, very popular in India. Um, People tend to invest in gold in various forms. Some invest in physical gold and jewelry, they're the most popular, but there's always the risk of theft, right? Because somebody might steal the gold, and you have to worry about storage, safety, and you pay 3% GST when you buy and when you sell. Digital gold, a lot of apps are promoting digital gold because it offers convenience and easy access. But number one, and most important, all of these are not regulated by SEBI or RBI. Digital gold is not regulated. Okay, so there's a lot of risk. People might just vanish with the money. It's not regulated. Also, it often comes with hidden charges for storage and insurance, and it lacks the tax benefits that you have with gold mutual funds and gold ETFs. Okay. Also, just like physical gold and jewelry, you have to pay 3% GST. So the preferred asset class way to invest in this asset class is gold mutual funds and ETFs. Okay. And you can see a picture on the right where you can easily invest in gold at mutual funds and ETFs. Okay. What are bonds? Bonds are debt securities which represent a loan from the investor to the borrower. The borrower in this case could be the government, for example, GSECs, which give up to 10% returns, or it could be corporate companies like Bajaj Finance, Shriram Transport, Mahindra and Mahindra. They issue FDs at higher interest rates, but they also carry higher risk. Or you can invest in debt funds. Debt funds are mutual funds that invest pooled money in the same debt instruments, short-term money market instruments, and less than risky, less risky than equity, but still risky corporate and government bonds. But the good thing is they're managed by professional managers. Okay. Um, the third asset class, and the one that a lot of people are very familiar with as well, is equity. So equity is, known as a share or a stock, and it is a security that represents a portion of ownership in a company. This is the most familiar asset class. Okay. Um, it's important to remember we're talking about investing, not trading. Trading is where people trade on the price, and that is typically what a lot of influencers, with a lot of people will tell you, oh, this is how you trade, this is how you can make a lot of money, and you invest in these hot stock tips, and it makes that's not investing. That is trading. That is where people are negotiating on the price. Like one person thinks the value is 100, another person thinks it's 150. So the person who thinks it's um, uh, who's bought it at 100 can sell it for 150 and make a profit. But that is not investing. Investing is when you invest in the company and you own a piece of that company. As the company increases in value, you get to benefit, okay, from that. So you basically invest in equity either through the stock market, buying stocks of that company, and that, like I said, allows you to profit from its growth. And we highly recommend that when you invest, you should be thinking long term in equity, not short term. Not trading. This is not trading. And we also realize that it takes a lot of learning to get to a point when you can start investing. So because of that, when you have your monthly allocation, like the amount of that you can save, if once you've set up your budget, you know how much you can save, and you know how much you have available to you to invest each month. Only 10% of that, right, should be invested in actual stocks. The rest should be invested in mutual funds. Um, so the advantage of using mutual funds is that you get access to qualified professionals who pool funds from various investors and manage on their behalf. They're flexible, they're cost effective, they're tax efficient, they're easy to transact in, and the best part of mutual funds is that you can take advantage of the systematic investment plan, or SIP, to make investments regularly and enable yourself to invest in small amounts monthly, right? Regular investments. Mutual funds are available in different schemes. You have a lot of choice. You can invest in a scheme that invests only in one asset, like only in gold or debt funds or equity funds, or you can invest in a scheme that invests in a combination of these assets in different proportions, like hybrid funds, right? Or fund of funds. And lastly, this is the one which we feel very, very, we would like to promote and we would like people to invest in, is index funds. Because index funds, they passively track an index. There's no active manager, so the expenses are a lot lower. So that what that means is that your returns are higher and they're also more consistent, right? Because there have been several studies that have been done, which shows that um, people, like the active managers, more than 70% of active managers do not beat the index consistently. So you might have, like, these 30 managers beat the index this year, and the next year they are the bottom. They way underperformed, and a different set now overperform. So the middle group are around the index. So why pay the extra cost when you can invest in an index fund and pay a lower, get a higher return because you're paying a lower expense ratio? Okay. Um, I'm not sure if I should did this with you earlier, but it's really important to remember, when you are investing, do not invest in any schemes run by an entity not having SEBI registration. Okay. Do not make payments in cash to any stockbroker. It's important that the money should be traceable, so it should go from your bank account directly into a stockbroker's account. Do not trade do not share your internet access, your trading account password with anyone, not your brother, nobody, not your cousin, no one. Um, and the most important is, do not invest Oh, yeah, another one. Do not trust written and oral promises of guaranteed returns, right? Anybody who's promising that you will make money in the, especially in the short term, um, is is probably a scam, right? And lastly, don't invest in regular funds. Always invest in direct plans. Every single fund will have a direct plan. But if you invest in the fund via a banker or a broker or an insurance agent or a mutual fund agent, they will put you in a regular plan because they will not charge you. They will get their commission from the fund, but the fund will give you lower returns because they're charging you the higher cost, and the cost is quite substantial. As you can see, this is an example of someone who, one of our customers, and he is paying up to, he's paid 2 crores in commissions over 30 years. Um, okay, so now that you understand about the various asset classes, it's important to remember that higher returns usually come with higher risk, right? Like stocks that can swing in value. So the larger the swing that's considered the larger the risk, right?
Yeah,
Safer assets.
hello, Tanya.
Yeah, Ashok.
Yeah. Sorry, can you repeat last one you said? Never invest with the. I just missed. I was listening you, but last slide.
Oh, you
Yeah,
mean the last
previous
one?
one.
Always invest in a
Yeah.
direct plan. So the way you can check to see whether whoever is advising you. So sometimes people say, "Oh no, I'm in a direct plan. I have an advisor." So
Okay.
when you link all your mutual funds with Nobias, you'll be able to see exactly what kind of plan you have. Like, do you have a direct plan or you have a regular plan? We'll tell you, and we'll also tell you how much you're going to pay in commissions.
Okay. Okay, Liz. Thank
Okay.
you. Thank you.
So yeah, so the idea is to immediately switch plans, switch from direct to, and you can do this with MF Central. Again, it'll all within the app. Okay, so onto this. So higher returns come with higher risk. What are the reasons for the risk? There are primarily 4 kinds of risk. There's market risk, which is the risk of your investments losing value due to overall market fluctuations, like the stock price suddenly falling during an economic slowdown. And this is something that is always very, very worrisome to people, but it can be easily managed because in a mutual fund there's diversification, number one, but also as long you have to be cognizant, and you have to remember that you have invested for long periods, and you're going to see short-term fluctuations, but in the long term, because you've diversified, your return will be going up over long periods of time. So you have to just trust the process. Second is interest rate risk. This affects investments like bonds, where rising interest rates reduce the bond's market value. For example, recent RBI repo cut, a lot of bonds went down in value. Next is liquidity risk. This is the risk of not being able to quickly sell your investment without affecting the price of the investment. So, like assets like real estate and certain stocks that have very low trading volume may be harder to sell when you want to sell. So, that's what it means to have liquidity risk. Credit risk is when a risk that the borrower, like the company or government, if in the case of bonds, may default on its interest or principal payments. So this is obviously relevant to bonds and other debt instruments. And if when you do invest in these instruments, investing in higher rated securities reduces this risk. Okay, so how do you manage this risk, right? The answer is diversification. You need to give up some of the returns in a particular asset because of the risk to manage the risk through asset allocation. Okay, This is what we're going to go over today. Asset allocation is the strategy of spreading your investments across different asset classes like equity, gold, debt, cash to reduce risk. Of course, remember, cash has no risk but loses value due to inflation. I don't know if you remember, 1,000 rupees becomes 940 rupees after 1 year and becomes just 500 rupees after 10 years. So as we saw, we saw earlier, so these assets don't move in the same direction at the same time, right? So gold, during uh, geopolitical crisis, gold will go up while equities go down. Um, Debt and very often you'll also see when equity prices are going up, debt is going to go down. When equity prices start going down, debt will start going up. So they're a nice balance to one another. The percentage that you invest in each asset class is going to be depending on your risk profile and your goals. So if you have a short-term goals, you should not have equity. You should only be invested in less risky assets. Same with your risk class. If you're very conservative, you should have less equity and definitely no small cap, because small cap equity is far more riskier than large cap. Okay. So mutual funds, of course, let me go to the next. Mutual funds have different categories for the different asset classes. You have safe asset investment class, liquid debt funds, and overnight funds. These have very low risk, but also low return. And these, you can see the low return, it's so low, it's just about 6%. So it doesn't keep up with inflation after taxes. There's no, you're not going to beat inflation. So you only want this for very short term. It's more to, it's safe, right? It's safe for safety purposes. Next is debt funds. Liquid debt, debt funds and some hybrid funds, they have more risk, but also more return. So it's, but, and they do beat inflation. But of course, the highest is equity. Large cap plus blue chip equity funds return about 13% in returns, and small cap as high as 17%. But the risk is much higher. You could, in some years, you might lose up to 21% of your money, right? Whereas with blue chip funds, the most might lose would be like 10% of your money. So it is very important to remember that high risk comes with high return. Okay, so one of the things I also wanted you, when you are looking to about to invest in an asset, uh, always check to see worst case scenarios. Like, what is the biggest losses? So that way you can prepare yourself. So when you see it going down, you're like, oh, I know it's gone down before. This has been taken into account. So but you need to steel your nerves and be ready, right? And that is why understanding a risk profile is so important. So now that we understood the money basics of investing, budgeting, saving, compounding, you understand all your assets. Now we're going to have a plan. We're going to make a plan to achieve our SMART goals, and a plan to manage your debt, and move on to investing for these, right? So whether your goal is to, build an emergency fund, or okay, whether your goal is to build an emergency fund, as you can see on the left, or say for retirement. So these are the two funds these are two goals that we always, and I think I explained this last week as well, we always include these two goals, right? But you might have others like saving for your children's education or a down payment on a home. So you need to have a clear objective so that you know exactly what you're investing for. Okay. That is why we have these SMART goals. And so here we have your SMART goals. You're ready to manage them. Next, now we're going to make a plan to invest for them. So you need your appetite or your risk profile is how we are going to invest on them. What did we explain last session on what is risk capacity and risk tolerance? Well, okay, if we didn't, risk capacity is the ability to take risks looking at your financials. So we look at your financials and we know how much you've set aside for emergency fund, what kind of risks you can take based on your financial profile. So it depends on the number of
Last time it
people.
was not discussed.
Okay, great. It depends on the number of people who depend on you, on your, it depends on your level of income. It depends on your capacity for loss. So risk capacity is grouped into low, medium, and high risk capacity. Next is risk tolerance. Risk tolerance is your comfort with risk from an emotional point of view, right? So it depends on your loss aversion, how much you hate to lose, right? Whether you feel more comfortable following the crowd, like being with if everybody else is doing something, you want to do the same thing. How you feel about these fluctuations in the market, right? So risk tolerance is grouped into conservative, balanced, and aggressive. So a conservative investor with a conservative tolerance and a low capacity is not going to do well when there's with a high allocation to equity assets, because when the market corrects, it'll cause them to panic, and that is going to lead to early redemption, and that is not going to be useful for long-term wealth creation, right? And then I also explained that your goal criteria also is an important input into managing your creating a wealth allocation plan, because for capital preservation in the case of short-term goals, we're going to be able to use
Slides are not visible, no?
Sorry? Hello?
Hello, your slides are not visible.
You
They
can't see my slide?
It's visible. We can see it. We can see it.
I don't know.
So could it be an issue with your internet?
Suddenly it went off.
It's
showing Tanya Avzad's saying screen sharing and double click on enter the full screen.
Akshay, you can see my slide,
the
right?
screen is visible, like I said.
Is Lalit, are you having trouble seeing it? Suresh? Is everybody
No,
else?
Tanya, none of us are having trouble.
It's a local issue. He'll just have to
Okay.
rejig. The clarity on the goal
Can you perhaps you can refresh your screen? Maybe that might help.
I don't know why this Zoom is getting off and on. Now it's okay. Thank you.
Okay, good.
Welcome.
Okay. So yeah, so you can see this is the app. This shows you your fund allocation, and for short-term goals, we will be putting you in assets that will help you preserve your capital, right? So if your goal is to create long-term wealth, then equity is what you need. But for medium goals, that's somewhere in between long-term and short-term, you need stability of returns, but you don't want returns which are as low as you get in capital preservation type of products. So we include long-term bonds and even equity investing in blue chip funds. Okay, so that's large cap funds. So ideally, you want a mix of all of these assets. Okay. So we're going to play this video. Once you have defined all your goals and allocated your available money from your savings, needs budget, and wants budget to your financial future goals, your needs goals, and your wants goals, the Nobias Artha app will give you a financial plan customized to those goals. You can see your plan by clicking on Manage Plan at the top of the My Money page. On the Manage Financial Plan page, you can book a meeting with a certified financial planner to discuss your plans if you like. This is a premium feature. You can view the financial plan assumptions and limitations where information on historical returns and risk are explained for each asset class that the plan recommends investing in. Is highly recommended. Here you can see all the as I mentioned earlier, the historical returns and risk, and they're explained for each asset class. The financial plan asset allocation shows the plan recommended by Nobias Artha. You can edit the recommended plan by clicking on the Edit My Plan, and the resulting allocation is shown so you can compare with the recommended SIP. When you edit the plan, you will be asked whether you want to change the short-term, medium-term, or long-term allocation models. Each model's rule of thumb is clearly explained on the relevant page, and you can edit the allocation percentages in each asset class, but the recommended allocation will not be editable. So you can always see how far you're straying from the allocation that Nobias recommends for you based on your goals and risk profile. For example, if you click on short-term plan, you can edit fund allocations. Suppose we edit gold allocation from 0 to 10%. Then liquid debt allocation will reduce from 85% to 75%. The risk profile is still moderately aggressive, so that is okay. But suppose we change the large cap exposure to 30% from 15%. Now liquid debt funds change to 60%, and more importantly, the risk profile has changed from moderately aggressive to aggressive. And a red exclamation mark is inserted. When you click on the red exclamation mark, it explains that you may be taking significantly more risk than your risk capacity and tolerance and may not be able to achieve your goals. It's important to remember that taking on more risk than you can handle may lead you to overreact to market movements, leading you running the risk that you may not be able to achieve your goals. Note that right below your plan allocation, there's always the recommended plan allocation for easy reference, followed by rules of thumb that it is based on. So here you can also see additional details on like your insurance, what's the best kind of insurance that you should need, or health insurance, as well as your taxes, which regime would be best for you, and so on. Once you have defined all your goals, okay, so as we mentioned earlier, it's going to be based on these rules of thumb will always be available at right below the recommended plan. Okay, so any questions so far?
So just a question, while this
Yeah.
and what you showed is interesting, when we do invest online in equity on the DMAT, for example, it does give
Yeah.
some alerts, right? They say that the script PE is higher than 50 for the previous quarters, and the close to close price movement was higher than 50% in the previous months, or the high-low price variation is higher than 75% in the previous months. Do you want to continue the order? Are these similar checks that you also have in Nobias?
Yeah, we do have it, but we don't constantly show it to you for the simple reason it's not healthy. It's not useful. The reason why those people are showing it to you is because they want you to trade. Brokers are going to be constantly showing you information about the price because they want to encourage you to be constantly trading, because that's where they make their money, right? Every time you buy and sell, they're making money and you are losing money, because trading, this is not for people who want to trade. This is about investing. This is about growing your money. This is not about sitting in front of a terminal 24 hours a day looking for cheap things, stocks to buy. That's the PE ratio, and then looking to see now is the time to sell. That is trading. I discussed earlier, trading is when you are looking only at the price. You're looking to see, okay, the price is good now, the price is bad now. This is not what we encourage. And it actually, most people who do that lose money in the long run. Okay,
Okay.
this is not, it's completely not recommended.
But
So
that's official demat sites, Tanya, right? This is on the official demat platform itself. You get such alerts when you book equity.
yes, I mean, it is very, very smart when you book, when you buy this any stock or any security, you should take note of all of this information and be aware why you bought it, what value you bought at a certain price, right? You think the price is low because of the PE ratio, because so you and we teach you that as well. We teach you what to look at, but then you make a decision to buy it, and you should at that point also put in your selling price, what price, because you will have done a study and you will decide the value, you come up with a valuation of the stock based on the fundamentals, based on the plan of the of management of the company. They're saying that in a couple of years, that and so you come up with a plan that this stock, which is right, the value of the company, the market cap and the price is at, like, say, 100 rupees, and you believe in the next 2 years it is going to go to 300 rupees. So you need to, if you make that decision, then you put in a 300 rupee value, that when it hits 300, I'm going to sell it, right? And and then also you need to also be aware of the risk, right? It's a possibility that maybe they won't get some contract that they're hoping to get, and then in that case the market it'll go down, right? So you should also put in a boundary, right? Like a price. If it goes too low, you can get out without too much of a loss. So these all things, good things to look at when you are buying, at that moment of buying. But to be constantly watching it, it's not healthy. The idea is going to be, you are investing for the long run. You should be looking at your portfolio once a month and actually executing on your portfolio once a quarter. Every time you transact, there are going to be costs, and other people are making that money, not you. It's not going to help your portfolio. Okay? Okay. So
The My Investments card shows the amount you have invested
okay, so I'm just going to this here, we're going to show you how now once you have your model allocation, right? You have your allocation and you know how much you need to invest in each type of asset. You know how much you need to invest in debt asset. You know how much you need to invest in equity and in safe, right? Next, we're going to take you to each asset class so that you can actually invest. Okay. So let me just, what I'm going to do is I'm going to play this without the volume.
The My Investments card shows the amount you have invested compared to the amount you should have invested in each asset type according to.
Okay. So I'm gonna rather than listening to him, I'm gonna explain. So here you can see this is the My Investment card. Okay, over here. And this is going to show you the amount you've invested compared to the amount you should have invested. So this person has invested 2,000, and they needs to invest 31,000 in safe assets. In the case of debt, he's invested 5,000. He needs to invest 24,000. Large cap, these are for his goals, right? He needs to have invested 1.5 lakh. He's invested 69. So he's over invested in large cap. So we put an exclamation. The exclamations help you understand what needs to be fixed, right? So let's continue. So here is where, when you go to manage your assets, it's going to take you through a list of actions. Okay. So first, you're going to be invested in safe funds. These are going to be, let's take a look. It takes you to your safe funds. So when you click on this, let's click here. So these are your safe funds, liquid funds, debt money market funds, and you can see all the funds below. And you can choose, and at the top is a blue box that says invest 3,500. It's a reminder. Now, if you click on it, we encourage you to invest only direct. Okay, you add it to your cart, you put the amount, 3,500. And here you'll see your cart at the bottom. I don't know if you got a chance to see it. So this is it gets added to your cart, right? At the bottom. Now you can go to the next step. So let's go to the next step. Now we can invest in ELSS funds. Okay, it asks you, so now you're going to see, it's going to ask me if I'm following the new tax regime or the old tax regime. And if I select the old tax regime, it asks for my existing ATC deductions. You can enter your existing ATC deductions here. The blue box at the top is going to show you that you need to invest 12,100 ELSS funds to complete your ATC limit. So you select this fund with the highest rolling returns, supposing you add it to a cart. You can select the top 3 funds and put, third. You can see it's added to your cart. So you just keep doing this one by one until you complete all your steps. Okay, then you can take a look at your cart. Okay, now you're adding the debt funds. Okay, now the large cap funds. So this is your cart. Okay, you've completed all the steps. Now you can click on MF Central. When you click on this, it takes you to the MF Central platform where you can start your SIP as per your plan. Okay. So remember, your plan is to achieve your goals in a way aligned with your risk capacity and risk tolerance. Okay, so now we're going to show you how do you choose a fund or stock. But honestly, we'll go. We have time, right? We have another 10 minutes. But I also want to point out that in the app, there are I buttons. So when you click on those I buttons, there are all these demo videos that I encourage you to watch in the app. So all of these videos that you're watching are already in the app. So to help you. So when you choose a stock, there are 2 methods. I mean, firstly, you have to go through 4 steps. The step 1 is you have to discover a stock. How do you discover stocks? There are 2 ways. One is a top-down approach, and the way that works is where you look at the sector, you decide based on news that maybe you might say, I think the tech sector is going to do well, or the energy sector is going to do well, right? The next 5 to 10 years. So look at the sector and look at all the stocks in those sectors, and then you research the which stock you want to invest in. That's the top-down approach to discover a stock. The bottom-up approach is where maybe somebody mentions the name of the stock itself, or you read news and they're talking about the particular stock. That's the bottom-up, and then you have to do the opposite. You have to read about the stock, and then you're going to do research on the sector. Next step is research. You look at the valuation of the company. You look at the financial ratios like the PE, price to earnings, price to book, EBITDA. And so in the app, we will help you assess financial performance. What we do is, as you will see, we give each, based on how well that stock is doing compared to other stocks in its peer group, like in that same industry. If it's in the within that industry, if it's doing, if it's got high speed, good price to book ratios, good liquidity, good valuation, then we give it thumbs up. And if it's relatively poor, then you'll see a thumbs down, right? Also, you need to read. We also include all of the reports that management has been making every year. So you can take a look. You can go back 2 or 3 years, see what management said, then read the next year. You just need to read the management discussion and analysis, the MD&A. Read just that paragraph, and you'll be able to get a sense. Has the management been whatever they promised? Did they deliver on? Right? So next is to look at performance indicators. These are look at the history, like especially in the case of funds, you have to look at the minimum that the fund saw. Okay, let me show you the video of the stock first, okay, before we go on to the funds. This is the explore page. Here you can research about different types of stocks and mutual funds. In stocks, if you select the small cap filter, you will be able to see all the small cap stocks listed on NSE. Similarly, selecting the healthcare filter, you can see all the healthcare stocks listed on the NSE. There are many other categories available for you to explore. Now let's dive into the research available for this healthcare stock. You can explore its price chart, bullish and bearish opinions, fundamental comparison with similar stocks, and key fundamental ratios such as liquidity, solvency, efficiency, and a lot more. You can also see the 5-year, 3-year, and 1-year rolling returns of this stock. There is a lot more for you to check out here for your analysis. Moving to mutual funds, you can see various types of funds such as debt, equity, hybrid funds, and a lot more. Selecting the debt filter will show you all the debt funds. Similarly, selecting the hybrid filter will show you the hybrid funds. There are many more categories for you to explore here. This card highlights the difference between regular and direct plans of a fund. It also shows you how much commissions you can avoid paying by selecting a direct plan over a regular plan. Inside, you can find the NAV chart, fund allocation breakdown, rolling return comparison, and other key insights. Okay. Okay, going on to mutual funds. When you look at a mutual fund, you need to see the minimum and the maximum and the average 5-year rolling return. It's very important because a lot of screeners will show you the CAGR, but the CAGR is just it's over a fixed period, right? Like just the last 5 years, for example. It's not showing you, or the last 3 years, or the last 1 year. The 10 years, of course, the best, but many funds, especially in India, are not that old. So you're forced to look at the 5-year. But the best thing to look at is the 5-year rolling return. The reason for that is you're not just looking at what happened from 2000 to 2025. You want to see how did this fund do for, if it, because you might have invested before the crash, right, at a very high valuation, and you want to see how did the fund make back that money that it lost during the crisis. You want to invest in a fund that is more than it's okay if you invest in a fund that's only 5 years old, but keep in mind that you don't know what the return actually would have been, because it's not gone through crises, right? So it's always, in our opinion, good idea to invest in a fund that has shown you good returns after having survived the two big crises, one in 2008 and another one in during COVID 2000. Okay. The things to look at: performance, min, max, the expense ratio, crucial, which is why, again, we want you to invest in index funds, because index funds has a very, very low expense ratio, much lower than 0.5. It's usually like 0.2. Also, do not always invest in a direct plan, because remember, investing in a regular plan means you're paying a whole percentage point, 1%, and 1% is coming out of your returns. Okay. Very often people say, oh, you're not paying me, I'm getting the commission from the fund. But yes, you are paying them. You're paying through the expense ratio, which is crazy. People don't understand that. Risk level. The 5-year Sharpe ratio shows you how much are you being compensated for the amount of risk you're taking, right? So the more risky, so it is basically your average returns divided by the risk, by the standard deviation. Okay, so let's take a look at this video. This is the Explore page. Here you can research about different types of stocks and mutual funds. In stocks, if you select the small cap filter, you will be able to see all the small cap stocks listed on NSE. We'll show you the hybrid funds. There are many more categories for you to explore here. This card highlights the difference between regular and direct plans of a fund. It also shows you how much commissions you can avoid paying by selecting a direct plan over a regular plan. Inside, you can find the NAV chart. Okay, so any questions so far about, do you want me to show you a little more of in the app? Does anybody need, I mean, you can see it yourself, but is there anything else before we go into it?
Tanya, can understand a lot of information. Okay?
Yes,
And
it is a
this
lot of
only we can
information.
understand by practically working.
Yes.
Hello, Tanya.
Hi.
Yeah, I'm Ashok here.
Hi,
Hi.
Ashok.
So I think very in-depth knowledge and various options are there with the app. The most important thing
Yes,
what the question came that how you are updating this information on daily basis.
daily. The information is updated every day. It's not updated every 15 minutes because we're not a trading app. Okay, but it is updated daily. So you have to make a decision when you're ready to buy. You can buy. You don't, like, all of your decisions should be made with a view for the long term.
Yeah.
It's not a
Okay.
trading app.
And yeah, another most important thing when you asked in the beginning whether you have went through the app. Actually, I went last week immediately with our session.
Oh,
Now there are
okay.
there are two options they're asking whether continue as a guest, okay, or otherwise we have to register.
Yes,
So
because
what is
guest.
the difference between this?
Yeah, so it's very, that's a very good question. And I think obviously we need to explain it better in the app then. Because a
Yeah.
guest means you're not really downloading the app. You're just seeing whatever we can show you, but nothing about your money. The
Okay.
reason is like, so your money is on the My Money page, right? So the
Okay.
My Money page is where you can do all your planning and all everything. The only thing you'll be able to see without actually linking, without signing, because we're a SEBI registered RIA, right? As an
Yeah.
advisor, you need to sign a contract with us and you need to pay us. That's another requirement. SEBI is very clear on that. Cannot give free advice. And it is important for us to understand you and understand your what are your savings, what are your plans before we can give you advice, right? So which is why you can, as a guest, you cannot enter that place at all. Guest is
Okay.
only, you can only explore funds, explore stocks, things that you could do for most apps. And you can also do some learning, right? Because you can click around. There's a lot of learn buttons where you can start to improve your financial literacy. But
Yeah.
what you cannot do is you cannot put in your email, your name, information. I cannot know who you are. As a guest, I do not know you. It's only when
Okay.
you sign
That's
in and
one.
know you, then
Yeah.
we start talking everything else, right? You'll sign the
Okay.
contract with us, that, oh yes, you're my advisor, and then you will link your bank accounts. And there was another question from Frank. He said, what's the best practice? Is it good and safe to link the personal bank information or manual entry of funds in the Nobias app? And my answer is, you should link the bank accounts. You should link your bank accounts, your mutual funds, link everything, because it's only then can we see and give you advice, right? And one thing to remember is all we follow best practices, not just best practices for Indian standards, but American standards as well. Everything is ISO certified. All your data is completely safe. We do not sell your data to anybody, unlike Cred. Cred goes around, I mean, sells your data. So you get calls from people cross-selling and offering you loans and stuff because they know how much money you have, etc. We do not sell your data to anybody. We are an RIA. RIAs cannot make money in any other way. The only money we're going to make is our fee. We don't make money on
Your
ads,
fees,
commission.
yeah. So there are two things. One, we have to pay for app, no?
Yes, that's
Yeah.
it. That's the only thing.
Only pay app. And what about your fees? There is another fees we have to pay?
No, that is the fee. When you pay for the app, so the app is a robo app. The app is giving you advice. Now, if in
Okay.
addition to the app, you feel like you want to speak to one of our CFPs, in addition to that, that's an extra, I think it's 150 rupees a month extra on whatever it
How
is you're
much?
paying. 150 rupees a month.
To talk with the advisors.
Yeah, and it's a monthly fee. It's only 150 rupees, and you can talk to them as much as you like. And they will, I mean, what we're trying to do is put everything, all the information that they would give you into the app. So you don't really need to speak to them. But if you do want to speak to them, then that's an additional level.
Okay. My
Okay.
another question.
Yeah.
Yeah. So when
Tell
we
me.
want to register, actually, this I tried last. Enter, verify your email, enter your full name. So we have to write full name and enter your corporate mail ID. So
Yes.
as this is our individual, why corporate mail ID is required? Because there's a
No.
corporate mail ID will only be used to check for corporate discount. Your
Yes.
discount will be linked to your mobile number only. You can also sign up for your personal ID. What is the ideal way of?
Right. So you guys will put in your personal ID because okay. So we really are talking to employees of companies. That is what we made this for, and so which the only reason why we're hoping, because a lot of people from HR are in this group, and so perhaps they would like to roll it out to their employees. But even for yourselves, so right now you guys will be joining as individuals, but we've brought it at 100 rupees a month is what we charge corporates with more than 5,000 employees. But we created a special case just till June 1st for GHRC members to download the app using getting access to the app at 100 rupees a month. Yeah, what Lara shared with you, which she shouldn't have, but that's a separate thing. But now that you have the code, you can use it. But that's really meant for within companies. If there are a couple of employees who want to try the app, that's what we're
Company people will recommend only when they have good experience of, no?
Yes, I agree.
So
Yes.
so first that we need to understand if we are getting benefit of it and getting proper support when I need, definitely will recommend all others, even a corporates, different HR people in different industry.
Correct. Absolutely. That's what we were expecting, which is why
So at present we have to do, we can enter our corporate, we can keep our individual, personal mail ID, no, here?
Yes.
Okay.
Because I
And
mean,
then
the only
how?
reason, okay, so it's important to know that the only important information is your phone number, because everything is
Yeah,
linked to your phone number. The only reason we were asking for corporate email is in the case of corporate employees, they would get corporate discounts, right, based on whatever we
yeah,
have on with the
yes.
company.
Corporate discount only when the large corporate has associated with you, and then you give a large discount. That's
If it's
reason.
if it's over 5,000, then instead of 250 a month, we
Yeah.
make it 100 a month.
100.
If
Yeah.
it is a smaller company, then instead of 250 a month, we make it 200 a month. So
Okay.
there is discount, but for individuals, it is 250 a month. Like if somebody hears about it or downloads the app, it is 250 a month.
Okay. For us, it is, you said that 100 per month?
Yes, 100 a month. Yes.
100. So how to
Yes.
pay that?
So you just click on, for right now, since you've downloaded and you're a guest, all you have to do is click on the My Money page, and there'll be a
Just wait,
pop-up that says,
I'm just registering now.
okay,
My personal mail ID, I'm just doing.
Let me
Okay.
share
Yeah.
screen and help you guide us, Ashok.
Yeah.
Expert guidance and the Lara discount.
No, I didn't got that.
Go ahead. We're with you.
Yeah, you can give that link again, what Lara has done earlier. Hello, Tanya, will you please?
Yeah, no, there's a coupon code that what Lara shared.
Yeah, please share again if you can share it.
Lara, did you put it in the chat?
Yeah, I put it in the chat.
Yeah, please.
1 second, I'll put it again.
Yeah. Oh, this is
Go ahead. Grab the coupon code.
this is a coupon code. Okay.
So this coupon gives you a trial where you can use the app for 3 months
Okay.
at 51 rupees. So not 50
Okay.
rupees a month, just 51, so 17 rupees a month. That's why it says
51 for 3.
15. 15 rupees
Okay.
plus GST.
Okay.
And then after 3 months, it goes to 100 rupees a month.
After, yes. Sure. Thank you.
Well
So
done.
we'll do that. That's only, I'm just doing it now.
Yeah.
Because
Not with you.
send very.
Ashok Sharma is the student of the year.
Thank you very much. Anyway, the person, if you are curious, we are a lifelong learner only. Okay?
Yeah.
Because life
I mean,
is all learning experience. I did got, Lara, I think, see, even my name and this one is, so send verification email. It is not going through.
So you now have to go to your email, and in your email there'll be a link that you'll have to
Author
click on.
requires recent login. See, I kept my personal full name, and then
Okay, can you
share?
Yeah.
and so wait, did you see a coupon code? Were you able to put a coupon code in?
No, coupon. I'm just registering first. The last time also I faced some problem.
While you're
Guest, you already have, no? You already registered as a guest.
No.
Just switch.
What? No, I know. But I think he's using an old app. Can you go to the App Store and refresh your app?
Yeah, just 1 minute. I'll go through the app. Just one, Play
Because I
Store,
think
and just tell me.
If you've not seen the coupon code yet, they've not asked you
Yeah,
for a
I've not
coupon
seen,
code.
but you say app. Yeah, app.
Download
I'm
app.
going through, and then okay, what I have to search? Play Store, no? Hello?
Yeah, go to Play Store. Yes, Play Store.
Yeah.
And you'd have to just update your app. So click on
Update.
Nobias Artha. Search for Nobias Artha.
Just 1 minute, 1 minute. I'm not able to. See, last time also I was not able. You know, there's some error. Error has come. We try. Guest. I don't know why this is. Okay, so I guess
Signed.
I am not
Your
present in the
agreement is
guest.
signed. A document is signed successfully. Yeah?
Hello?
I got a message that your document is signed successfully.
Hey, congratulations.
Okay.
Congrats. You're on board. Welcome to Nobias.
Now, see how to start. My money. Okay. Get it started. Okay, my money. Again, it is going the same way.
Have you linked your accounts?
Request OTP.
Yeah.
Okay.
After that, we link the accounts.
Account means bank account we have to link.
Yes.
So if
It'll
I have
show up.
4 bank accounts,
Yeah,
or
you can
maybe
link them
more
all.
than all to be. Acha, now it is asking register, huh?
Yeah. Now you register. Don't forget the
You have
coupon
to
code.
register. Registered. Okay.
You want to share screen, Ashok? We'll all understand how you're
Yeah.
doing, so you don't go through the same labor pains as you are.
I think you have to go through the same pain. I mean, you have to.
Send verification email.
Like Lara is still driving.
It's not getting through. I have entered my full name and then enter corporate. They are asking corporate, but I have kept my personal mail ID.
Do you
Send
see the
verification.
coupon?
It's not going ahead now.
Okay. I think we'll have to take you.
Session
I'll
3.
connect you
Resend
through.
email.
Session 3. I think this calls for a third session.
No, I'm gonna. That's why I really wanted everybody to have downloaded it, and you would have gone through during this week, so we would have been able to answer questions today. What I suggest you do is speak to Mohit. We'll connect you to our engineer, and he will make sure
Yeah, just tell
to
me.
figure
Yeah.
out where you're stuck. Yeah.
Verification, verify. Okay. Verify my email address. Now it has come.
Yay, congratulations. Well done. Now you can link other
Okay.
accounts. All the 4 accounts you can link.
You can sign. Okay. Now you can sign with your mail ID. Okay. Verified. So, see, in India, mostly,
Mhm.
yeah, the account. So choose your plan. Nobias are now what is here? Buy now. What I have to do?
DIY is the do-it-yourself plan.
DIY finance. एक minute.
How much does it say
DIY
here?
finance plan.
What is the amount it's saying?
100 per month.
Okay, so that's because so you had so that you have not put in that coupon code, but
Coupon code
how
it was not asked now before where it is.
I know because you've got the older app. Lara should not have given it, so that was the problem because everyone on this call has downloaded the app last week. You would have
Ah,
to, before she gave you the code, she should have had you refresh
so we have
on the Play
to,
Store, refresh the app. Yeah.
we have to, acha, we have to, what we have to do now? This app need to be
Uninstall,
deleted.
reinstall it again, use the coupon code, get your 51 rupees ka benefit for 3 months.
So this is to be, deleted,
Uninstalled.
No. Yeah.
uninstall, huh? Yeah, I will do that. Install it.
Now that done the steps for once, Ashokji, you'll be able to do it easily the next time.
Yeah, that's why, yeah, first time always we are learners, so we need
That's what we're telling RCB also. The first time, there's always a first time, even after 18 years.
yeah. Mhm.
And yeah, I have a question. Can I ask you?
Yes, of course.
By the time
Yeah,
people can
I've
ask any
just
question.
I have registered and I have logged in and everything.
Mhm.
I did the payment and it tells like within 1 day we will get to use it, right?
Yeah,
Like
within a
payment
day, you should,
confirmation.
right. So you have to upload your receipt,
Yes, yes.
and yeah, and then as soon as they, Lara, have you seen Akshay's receipt?
No, I I can't see the receipt.
Okay, can you can we get Mohit on the call to help?
I'll
I
call
mean,
him.
yeah.
What it is telling is you are still verifying your payment details. It can take 1 to 2 days due to
Yeah,
large
it could.
volumes.
It could.
Yeah,
It depends on volumes, but
yeah, yeah.
you know, they're on the call
And
right
my
now.
second question is this app linked to like Zerodha or something? I can see that Pratik's videos on the top depth and trap from the zero one.
Yeah, so 01 has great videos, like
Yes, yes.
especially a few of them. So you can watch them because it's all our information in the app is based on NISM,
Hmm,
and so not all their videos are good, but some of them, like the three that we've
hmm,
included, are aligned with NISM and aligned with everything, all the information that we have in the app. So
hmm.
everything in our app is aligned with NISM by design.
Got it, got it. Yeah,
Yeah,
because
so
I
they
saw them in the
yeah.
Zero One Fest, which happened in Bangalore, Zerodha Fest, right? I saw them all
They're
like
really, I mean,
personally.
I was
Yeah.
so impressed with
Okay, guys,
with that.
Franklin, Maria, and Akshay, both of your payments have been approved.
Thank
So you
you.
can go ahead with the app.
Thank you.
Wonderful. Well done. Welcome on board, Franklin.
Thank you.
Shankar, you
Samantha is very
excited
active, huh?
with
I'm learning from you guys.
me.
Very active person. Nobias, no? Nobias
Nobias.
Finance.
Yeah, same.
It's
Which app it is?
Same one, no bias.
yeah, no
Whereas
bias.
Zerodha playing in the background is what we hear, which is great news.
Stall. Yeah.
So and this what I was gonna say is in the app
Is
you'll
it only
see
Nobias or hello? There are many Nobias here.
there's only
Hello?
one no bias. No bias Artha. ARTHA. That's
Artha,
what it's
no? Okay, okay.
Yeah, that's the one. Maybe last time we did something else. Akshay, did you use the coupon code?
Yeah, yeah. I used the coupon code.
Fantastic.
And Tanya, I also love to invite you for a podcast interview where you can talk about the money management, everything, and then in the end,
sure,
we can,
absolutely.
yeah, we'll connect you on LinkedIn. I think I've sent you a connection on LinkedIn.
I'll look into it.
Nobias
I'm right
active.
now. The thing is,
Sure.
I'm in the US right now, so time zones are a real problem. It's right now 2 in the morning,
No. Oh my God.
2 o'clock. So
It's okay. Except IPL nights, Tanya, we would be happy to do evening calls also. Your time.
no, absolutely. Oh, no, don't worry about. I mean, we have a full team in India, so they're ready to answer your questions. You don't need, you know, to talk to me. But I just want to do this last slide quickly. So this is just everything that we've gone over. The 7 steps. Recap. You have to first plan your budget, allocate your income, right? Decide how you want to allocate it. Is it 50, 30, 20 like we recommend? Or do you want to put, if you're living at home, you can make it, your needs will be less, maybe 40%, and then your savings can be more. So whatever first put in all your income, allocate it. Next, set aside your savings. So as soon as you know that you have a budget in place and you're going to stick to your budget, at the beginning of the month, don't wait to save. Spend what you do not save, right? So put the savings into a separate savings account from which you're going to set up your SIP, okay? And leave the rest of the salary in the expense account, which you're going to be spending. Track your spending because remember now you have less money in your expense account, so you can stick to your budget. Then step 4 is set up your SMART goals and prioritize them. Nobody else knows your goals, only you know them. It's important that you set it up properly and prioritize them. Once you've done that, and you've done your risk profile, next you will get an investment allocation that tells you how much to invest in each asset class. Then you invest based on that, as I showed you with the investment plan and the investment card, and you set up your insurances to protect your plan. Okay, so those are the 7 steps. Very important. Every day, so these are the 3 things. Daily, read news on any exposures you have to any companies, because even if you have mutual funds, there's going to be exposures to stocks. So read up upon them. It's just going to improve your financial literacy over the next 5-10 years. There's no hurry. Just keep learning. As your wealth grows, you should improve your knowledge and just familiarity with the words, right? It's like a new language. Next, daily, you please make sure that you categorize your transactions into your budget category. So then when you open on the My Money page, you'll be able to know exactly how much money you have left. So you you're able to stick to your budget. Every month, you should monitor your budget to decide what changes you want to make. And do your research on any stocks or mutual funds you find interesting, so you can save them in your watch list to buy them later. Quarterly activities, this is where you look to see, because the reality is when you have equity exposure, sometimes the equity exposure goes up, the value goes up, and then you'll have more exposure to equities because the price has increased compared to debt. So you might have to rebalance. So that happens every quarter. Okay. And regularly monitor your net worth. Look at your health. We have a financial healthometer, you could call it. You can see how strong are you financially, and also you'll be able to. One of the features coming soon is the portfolio health. You'll be able to see how strong is your portfolio. Remember KYC and risk profile, they're SEBI mandates. Very, very important that you do it. Very important that you spend time making sure you answer those questions honestly. Like I mentioned earlier, all the learning content is taken from NISM, and you can click on the links to NISM, and you can verify. Accurate data is the most important. We get all of the banking data, that to answer Frank's question, from trusted account aggregators. This is all by Sahamati. It's a government mandated organization that is tasked with regulating the account aggregators. So I cannot link to your bank account. It's the account aggregators link to your bank account and give me the information which I show you. And like I said, mentioned earlier, your data is all ISO protected. It is not shared with anybody. Yeah, so this is relevant when it comes for employees. We make sure that employees understand that the employer doesn't know anything about their data. They don't see their data, and they are not part of any of the planning. All they're doing is making this access to our workshop and access to us, but not anything else. So they're not responsible for any decisions that are made. Any decisions is made because we take that responsibility. We are the advisor. Okay, and it's between the app and you. If you don't book a CFP, it's up to you to put the right information. All your data will be saved, because if SEBI wants to see what did we tell you to do, and why did we tell you to do it, then we need to we will show them that this is the data we had. Based on this data, this is what we recommended. Okay. Remember, your goal is to live a stress-free life and to be confident that your money is working for you in order to give you a secure future. The whole idea about the advisory and the planning is to have a plan in place so you can beat inflation and make sure that you don't run out of cash for the things that you really care about, like your kids' education, weddings, retirement, and having a consistent flow of income after you retire. Yeah, so that's it. Here is the phone number. You should take it down if you need to talk to. We have customer support people standing by, and if it's a question about the app, they will answer it. If it's a question about if any financial question, they will pass you through to our financial folks. But of course, they will not give you advice. They will explain the app. That would be giving, looking at your goals and plans and everything would be a separate thing. Okay, any questions?
Thank you. This very nicely. Again, you recapped very well. Lara, I just again want to help. I again went to play. Earlier one was uninstalled, and again I installed that.
Okay.
But still, it is showing me.
Ashok, can I just have your phone number? I will message you,
Yeah.
and we'll connect with you soon after this.
Get Mohit onto them.
Yeah.
I'll get
Because
Mohit onto them. I'll
Yeah.
get Mohit onto Ashok.
And let us know your experience, Ashok, after all.
See, Akshay and Franklin have both managed. So there is something that, we need to help you out with, which we are happy to help you. So if you can just give me your number, I'll connect with you soon after this call, after this meeting.
I think almost our meeting is
Great.
over. So, yeah.
It's okay. You can put your number in the chat
I'll
box.
message you. I'll give you my number if you can text me.
You can do a direct
Okay.
DM. Yeah. Others will all be watching.
Yeah, Ashok, I
Shankar is very
sent you a
proactive
direct
person,
message
He
with
is
my phone number.
helping everyone.
Happy to learn also.
So listening is also a very important skill.
Yeah. 80% of the life is
Without
listening.
listening, speaking is not good.
True.
That's
Thanks,
also.
Sunil, for coming in from US time. Thanks, Lara, for giving us the coupon code, and also while you're on the wheels. So we hope you reach safely. And thank you, everybody, for 2 weeks of absolute great insights on not just Nobias and the app, but also about investment tips. A lot of us will learn a lot, understand a lot, and be wiser people thanks to all your insights.
I'm great. And again, if whenever you feel comfortable, if you want us to come in and speak to your employees about at least the first session about budgeting, saving, and goal setting, and then if they're interested in downloading the app, then whoever downloads it, we can go into a second session. Because second session, it really is, it helps a lot more to actually have your goals in there. Then you can start to see how, the second part, and it's just more useful. The questions will be more useful rather than how do I set up the app? How do I download it? Okay. Thank you, everybody.